I'm Tommy Humphreys for Kitco and Cambridge House at the California Resource Investment Conference, and I'm joined by Frank Barbera, the editor of Gold Stock Technician newsletter and a mutual fund and former hedge fund manager. Thanks for joining me.
Good afternoon, Tommy. Nice to be here. Thank you for having me.
Tell me, what's your take on the markets right now?
Well, I think we've just been through a very major inflection point. If you look at what happened in Europe last year, we were looking at one of the largest credit crises, perhaps in decades. That was really moving towards a critical mass in early December. Some of the large French banks, Italian banks, they were in major trouble. And I think what you saw in that second week of December last year was the central banks stepping in mass, printing up an enormous amount of money. It's something close to $1 trillion that has been created now through the ECB, through the Target 2 system in Europe, which is an interbank lending system. And that money has put a liquidity cushion in underneath these troubled banks. That's helped equities quite a bit. It's even helped the euro stabilize quite a bit. It's interesting, though, if you look at the outlook for U.S. Treasury bonds and German bunds, as the northern countries of Europe have made this loan essentially to the southern countries of Europe, we're starting to see bond yields turn up in those northern countries, and also U.S. Treasury bonds have started to turn down in price and up in yield. So I think you're starting to see a big balance sheet transfer. This is very bullish. It's very bullish for the metals. Because I think basically the goal here is to start weakening the U.S. dollar, and that's one of the things I'm watching very carefully. I think we're starting to see the U.S. dollar roll slowly into a downtrend.
So how do investors at home play this?
Well, this is super bullish potentially for resource assets. You want to be looking at mining stocks. My focus historically has always been on large cap and mid-tier mining stocks, companies with proven assets in the ground and cash flow. Right now I do place a little bit of a premium on having cash flow because it means that the company is not dependent on access to capital markets for funding. So I think that's a little bit of a conservative approach. But I think for the first time in a very long time, we might be getting ready to launch an important bull market move in the major and mid-tier mining stocks. I'm also bullish on energy service stocks. We have $100 oil prices. And if you look at valuation in both of these sectors, valuations are historically low. You can look at the large cap majors at around 10 times cash flow. Back in the 1970s, some of the major lows there, they were around 9 times cash flow. So I think the major stocks are about as cheap as they're going to get. If we get a falling dollar climate, that's going to be pretty super bullish for the mining stocks.
Tell us a little bit about your newsletter.
My newsletter features a technical overlay on some of these positions where the goal would be to protect investors when the space starts to run into difficult times. The idea using trailing stop losses to limit downside risk. I think for a lot of investors, we all kind of appreciate the forward-looking potential on the upside for the precious metals and the mining stocks. But those mining stocks, they're pretty high beta. They can move around a lot. And for some investors, maybe having a small portion of their portfolio that's not buy and hold, but has a little bit of a tactical overlay, that's the kind of thing we try to provide.
So is your newsletter geared at retail investors or more institutional?
It's really geared at retail investors. It's a retail product.
And how do people sign up?
They can email me at frankbgst@yahoo.com. It's kind of a small boutique newsletter, and we'll send them out a free sample.
Website coming soon.
Website coming soon.
Frank Barbera, thanks very much for being here.
Much.
For Kitco and Cambridge House, I'm Tommy Humphreys. Thanks for watching.